Hello and welcome. Yesterday, the euro-dollar pair continued to largely move sideways. In the first half of the day, a strong sell signal from the level of 1.1323 was created. Then the European currency extended losses after the United States reported statistic on rising producer prices. This data confirmed that the US Federal Reserve will most likely increase the pace of its reduction in bond purchases and raise interest rates earlier than planned. If the regulator makes some unexpected decision today, demand for the US dollar will remain high. In this case, the euro-dollar pair is anticipated to continue trading downwards, break through the support levels and probably hit a new low, falling below the low posted in November. If the outcome of the third meeting is in line with the market expectations, the euro may well advance. The main reason for such bullish dynamics may be the European Central Bank's meeting to be held tomorrow. Its outcome is unpredictable. If policymakers drop hints about monetary policy tightening amid rising inflation in the euro area, the euro will most likely gain upside momentum. As for the third, the situation is clearer. The US regulator is expected to revise its interest rate outlook and agree to end its asset purchase program sooner than the current timeline. In addition to the third meeting, today's macroeconomic calendar includes data on consumer prices from Britain, Italy, and France, as well as retail sales from the US. If statistics on inflation in European countries indicate faster than expected growth in November, the volume of long position on the euro will increase. In my opinion, it's worth focusing on tomorrow's ECB meeting as it will determine the euro-dollar pair's further direction. From a technical point of view, if the price breaks through the level of 1.1276, the euro-dollar pair will most likely continue trading within a wide sideways range. Amid data on inflation from EU member states, the euro will have a chance of recovering to 1.1301 and rising above the high of 1.1323. If the price forms a false breakout in 1.1276, a sell signal will appear. In this case, bears will aim to drag the price down so that it could break through the area of 1.1255. If they succeed, the euro is expected to slide to 1.1230. A more significant downward movement is impossible in the event of some unexpected decision made by third officials. In this situation, the euro is forecast to plunge to 1.1208 and then 1.1188. From these levels, it will be possible to open long position on a rebound with a view to catching an intraday correction of 15-20 pips. Long position from 1.1230 can be considered only in case of a false breakout. Speaking of the British currency, if UK inflation data turns out to be worse than expected, the pound sterling will come under pressure. In case the inflation rate exceeds analyst expectation, rising about 5%, the Bank of England will probably change its monetary policy already at tomorrow's meeting. In the meantime, bulls have a chance of driving the British pound up if buyers are able to push the pound sterling about 1.3254. The volume of long position will increase. In this case, the British currency is likely to recover to 1.3286 and then 1.3370. No. The pair's test of the 1.3317 mark will be signal the formation of a new bullish trend. A false breakout in 1.3254 will create a sell signal. Thus, bears will try to drag the price down so that it could break through and fix below 1.3222. Its bottom to top test will provide traders with an opportunity to go short, counting on a decline in the quotes to 1.3191 and 1.3962. From the level of 1.3162, it will be possible to open long position with a few catching an intraday correction of 20-25 pips. Short positions from 1.3191 and 1.3222 can be considered only in case of a false breakout. Well, that's all. If you have any questions, please post them in the comments below. Good luck.